Shyamsunder with us, Vice President and Institutional Portfolio Manager, EME India at Franklin Templeton. Hari, good to have you with us here. Good afternoon. Thank you for your time. So give us a sense of what's happening at Franklin. I think your first time here on CNBC, so welcome. And I hope this is the first of many. So give us a sense of what's the thought process, Hari, at Franklin. How are you approaching markets? What's the view overall? Because, I mean, we've done very well. Markets, even with this 10% pullback on the Nifty that we had from the September highs, things have gotten back pretty quickly. Small cap index last fortnight is up 10%. So where does it leave us?
Just starting with how the year has panned out, in a sense, Prashant. We started the year looking at the entire world going for elections, right? So most of the democratic world is going for elections. And what is remarkable is that the outcome across the entire world has been the same. The incumbents have either been defeated or they've had a weaker mandate. Now, if the voters have voted for change, then I think 2025 sets us up for seeing some of the impact of that change. We're already starting to see some of that playing through. We should expect 2025 to be a bit more noisy. We should expect it to have a lot more noise on the geopolitics side, even on the Indian side. I think we've already seen some of the changes starting to ripple through. So if you look at our markets as well, we started FY25 with the projections that the markets are going to grow by about 15%. That is not going to happen. We are going to be maybe at the high single digits in terms of the earnings growth for the Nifty at least. And I think the reasons for that, if you look at it, have been pretty clear. We are seeing that the government spending has been weaker on the Capex side. So for the first half of the year, if you look at it, government Capex is down 15% odd, which is left, if you look at the projections which are made in the budget, that's left about maybe a 1.4 lakh crore void in terms of the Capex spending. And that's, of course, shown up in the earnings across the board on the consumption side as well, while the government spending there, if you look at it, it's very, very clearly up very sharply, whether it's the agriculture, PDS, social spending. Across the board, you've seen 30% kind of allocations which have happened, 30% increase in allocations which have happened. And that has supported rural. So you've seen that two-wheelers are up 15% from September to November. You've seen year on year at least, and tractors also showing similar kind of growth. But consumption as a whole hasn't played through because urban has played a bit of a spoil sport. So consumption anyway has not been really the backbone of what this market has been about, right? It's been mostly a investment-driven cycle. And we firmly believe that India is on a multi-year Capex cycle on the government side, on the private side, and on the household side. The government's already spoken, and they've already showed up and played the game in terms of increasing the Capex sharply. Private has shown signs of the spends picking up. This year the first half has shown some signs of continuation on that, but not maybe at slightly lower pace. Some ripple effects from the government slow spending as well. But real estate, of course, is something which we continue to be positive on as well. So across the board, if you look at it, this has been a market which has really rewarded stock picking. Stock picking is our forte. We are bottom-up stock investors. We have seen a healthy set of stock rotation and sector rotation play out in this entire market. And that's what we continue to expect to have. Positive on a number of themes related to these sectors, and we're looking forward to.
Hope to see more of you. So that kind of sets the stage, right? You're still a believer in Capex as a house, and you believe there will be a pickup both in government as well as private Capex in 2025. So expand on that. And manufacturing, and somewhere throw in a word on autos as well. I mean, you've looked at auto companies in India very, very closely in your earlier avatar as an analyst as well, right? And there's so much moving here. And we were just talking about the FADA data. In the morning, those numbers came out. And look at the pain. The CV pain continues. Passenger vehicles, apart from SUVs, the entry-level segment is not really hitting home. Then there's a whole EV transition. So talk about Capex and manufacturing. And within that, will autos be a way to play it at all?
Sure. So Capex itself, now we've got to look at the fundamentals of it, which, as I said, the government second half spending, if if they even meet the budgeted numbers. We are talking about a 30% plus year-on-year growth coming through for the entire market. For the government spending. That provides a strong sequential boost to spending, and you could see a lot of noise, or positive noise at least, coming out over the coming months on this particular side. Now, of course, we are also conscious that the valuations in some of these places have been stretched. With the government spends jumping as much as they have in the last 3 to 4 years, some of the stocks had also priced in that in perpetuity, and that was just unsustainable. So not to speak about any stocks directly, but if a stock has gone from 15x to 80x and now is down at 50x, it does not make it necessarily very attractive to invest in. Still, we are still waiting for some of these stocks to get to very attractive levels. We still are positive on the banks. We are positive on the financial sector. I'm playing it through banks. It's a bit boring in the number of times it's been spoken about, but we are things seem to be aligning there for the banking space. On the consumer side, we are the believers in the premiumization story of the Indian markets. Even the auto space, we have seen premiumization play out in its own way. I mean, definitely SUVs are a clear sign of how the Indian market is premiumizing on the auto side. Yes, the FADA data has shown a bit of pain playing through on some of the retail side, but some of this tends to be a bit temporary as well. We have seen urban discretionary, urban income, and urban consumption names being impacted, but we think that this is a bit of a temporary lull before it starts picking up again. So while you've seen it do fantastically well, the whole K-shaped recovery was premised on the urban consumption doing very well. Now that seems to have played out, at least in the near term. But the arithmetic of the growth which we are seeing, and the per capita kind of growth which you're seeing over the years, just points to the fact that this is a space which is just going to continue to play out
Hari,
well in the medium term. Yes.
Yeah, Hari, just to complete the point on Capex, you said that you're still waiting for some correction in some of these stocks. It's true, right? I mean, a lot of the MNC capital goods makers are still trading at some 75, 80 times. So you're saying you're waiting for correction there. In the meantime, you're playing the Capex recovery via banks. And is there anything else?
Banks, construction materials, realty. So these are the ways which we are looking to play the Capex theme. So, I mean, apart from that, consumer services also is something which we are positive on to play the consumption name, whether it is through restaurants and hotels or retail as well. Select parts of retail have been very attractive to invest in.
Hari, I noticed you have Kalyan Jewelers in your portfolio.
Yes.
It's not I know, I'm sure you can't stock specific names, but across the board, right? I mean, you can rotate out of some of the very expensive names to lesser expensive names. I mean, I just thought of it because PN Guard, there was an initiation report on PN Guard. I mean, trades at 40 times. And of course, I mean, the cheaper ones, and there are others as well, but just your thoughts. It makes sense to do it as you wait?
Just, I mean, without getting again to specific stock names, this point to a couple of important textures of the market itself. One is talking about stock selection, and the second is the formalization as well. So you have seen jewelry names. If you look at the top 15 jewelry names, those have grown much, much faster than the tail end of the jewelry space, right? So I think the data just points to the fact that formalization has been just such a powerful theme which has played out, and there's no better example of that than the jewelry space itself. You've spoken about a couple of stocks in particular. Both of them have been witness to this particular theme playing out. And yeah, I mean, without making any recommendations, it's just pointing to the kind of stocks which are working in this market.
Okay, all right. We'll leave it there, Hari. Thank you very much. And we'll pick up on some of these points in our next one. Thank you for being here on CNBC. We'll take a quick break here. We're going to come back. Nimesh joins us on D Street Chatter and some trading ideas as well. I think there was a brokerage called Infosys at the bottom of the screen. So we'll address that as well.
The outstanding business